Have you ever questioned why societies have valued gold and silver for thousands of years? It's not just about their glittering allure or their use in crafting objects of beauty and status. These precious metals have served as a universal currency and a symbol of wealth throughout history. Today they continue to play a significant role, especially in an increasingly volatile global economy. Investing in gold and silver isn't about stashing away shiny trinkets. It's about securing a tangible asset that has withstood the test of time, economic upheavals, and shifting governmental policies. Their scarcity, combined with their diverse applications in various industries, contribute to their enduring value. As we navigate through turbulent economic waters, with inflation on the rise and currencies fluctuating wildly, the allure of these precious metals becomes even more pronounced. They offer a potential hedge, a safe haven in the stormy seas of economic uncertainty. Let's delve deeper into why gold and silver might be the key to safeguarding your wealth in these uncertain times. In the world of investments, gold and silver hold a unique position. These precious metals have been treasured for their intrinsic value for thousands of years, and today they continue to be a solid choice for investors. But what makes them so special? Well, gold and silver serve as a hedge against inflation. When the cost of living goes up, so does the price of these metals. This makes them a reliable way to maintain purchasing power over time. But their benefits don't stop at inflation protection. In times of economic uncertainty or instability, investors often turn to gold and silver as a safe haven. These metals have proven their resilience in the face of financial crises, market crashes, and geopolitical tensions. When other assets falter, gold and silver tend to hold steady or even increase in value. Moreover, gold and silver can also defend against currency devaluation. As paper currencies fluctuate and lose value, these precious metals retain their worth. This makes them a powerful tool for preserving wealth over the long term. So, whether it's for inflation protection, economic stability, or wealth preservation, gold and silver offer compelling reasons to be part of your investment portfolio. And let's not forget, they also offer diversification, a crucial aspect of any successful investment strategy. With that in mind, let's take a closer look at the individual markets for gold and silver. And the gold market is a complex and fascinating entity. It's like a grand symphony, with each element playing a crucial role in the overall performance. Let's delve into some of the factors that influence the price of this precious metal. First up, we have supply and demand. Just like anything else, the price of gold is driven by the basic economic principle of supply and demand. When demand for gold increases, and the supply can't keep up, the price goes up. Conversely, if there's a surplus of gold, but not enough buyers, the price decreases. This interplay between supply and demand continuously shapes the gold market. Next, we have central bank policies. Central banks around the world hold vast amounts of gold in their reserves. Their buying and selling activities can significantly impact the gold market. For instance, when central banks buy more gold, it can drive prices up. On the flip side, if they decide to sell, it can lead to a drop in prices. Now let's talk about geopolitical events. Gold is often viewed as a safe haven asset, meaning investors turn to it during times of political or economic uncertainty. Conflicts, elections, policy changes, all these can stir up uncertainty and drive people to invest in gold, pushing its price up. But how have these factors played out in the past? Well, if you look at the historical gold price trends, you'll see some intriguing patterns. During times of economic stability and growth, gold prices tend to be relatively stable or even decrease. But during economic downturns like the one in 2008, gold prices soared as investors sought a safe place to park their money. What about more recent trends? Well, the ongoing global pandemic has certainly made its mark. The economic uncertainty it has caused has led to a surge in gold prices. Investors worldwide have turned to gold as a way to protect their wealth amidst the turmoil. To sum it up, the gold market is influenced by a multitude of factors: supply and demand, central bank policies, and geopolitical events. Keeping an eye on these factors can help you understand the gold market better and make informed investment decisions. Now that we've covered gold, let's shift our focus to another precious metal: silver. While gold often takes the spotlight, silver is a precious metal with its own unique investment potential. Silver, often dubbed as the little brother of gold, has a different investment profile. Unlike gold, silver is not just a store of value but also has a significant role in the industrial sector. Silver's industrial applications are diverse, spanning across sectors such as electronics, solar energy, and even medicine. For instance, silver's superior conductivity makes it ideal for use in electronics, while its reflective and conductive properties make it indispensable in the solar industry. In the medical field, the antimicrobial properties of silver make it a key component in certain treatments. These industrial uses mean that silver's price is not solely reliant on investor sentiment or economic uncertainty, as is often the case with gold. Instead, silver's price can also be influenced by factors such as industrial demand and technological advancements. This dual role of silver, both as a precious metal and an industrial metal, adds an extra layer of complexity when analyzing its market. But how does silver compare to gold in terms of performance? Historically, silver has been more volatile than gold. This means that in bull markets, silver tends to outperform gold, offering potentially higher returns. However, the flip side is that during downturns, silver can fall more drastically than gold. So while the reward potential is higher with silver, so is the risk. Despite this, silver can still play a vital role in a diversified investment portfolio. Its correlation with gold means that it can serve as a hedge against inflation and economic uncertainty. At the same time, its industrial uses can provide a hedge against a downturn in the gold market. In conclusion, silver offers a unique blend of characteristics that make it a compelling investment. It combines the safe haven status of gold with the growth potential of industrial metals. This duality is what sets silver apart and makes it a metal worth considering for any savvy investor. Now that we understand the markets for gold and silver, let's discuss some practical strategies for investing in these precious metals. Investing in gold and silver is not as daunting as it may seem. Let's dive into some practical strategies. Firstly, you can opt to buy physical metals. This is the most traditional way to invest in gold and silver. You purchase the actual metal in the form of coins or bars, and then store them in a safe location. This method gives you direct ownership and control over your investment, but it also comes with storage and insurance costs. Secondly, you can invest in exchange-traded funds or ETFs. These are funds listed on stock exchanges that track the price of gold or silver. By investing in an ETF, you're buying a share of a large pool of gold or silver without having to physically store it. This is a more convenient option, but it does involve management fees. Lastly, you can trade futures and options. Futures contracts allow you to buy or sell gold and silver at a predetermined price in the future. Options give you the right, but not the obligation, to do so. These are more complex instruments that offer high potential returns, but also carry a higher risk. So, whether you're looking to physically hold your investment, want the convenience of an ETF, or are inclined towards the potentially higher returns of futures and options, there's a strategy for you. While these strategies can be rewarding, it's also important to be aware of the potential risks and challenges. Investing in precious metals, like any investment, comes with its share of risks. One of the primary challenges is market volatility. Precious metals, especially silver, can experience sharp price movements in short periods of time. This can be due to various factors such as geopolitical events, shifts in supply and demand, and changes in central bank policies. Another challenge is storage costs. If you choose to invest in physical gold or silver, you need to consider secure storage options, which can be costly. Then there's the matter of taxes. Depending on your country of residence, you may have to pay capital gains tax when you sell your precious metals at a profit. So how can you manage these risks? Well, diversifying your investment portfolio can help. Don't put all your eggs in one basket. Spread your investments across different asset classes to mitigate potential losses. Understanding these risks is crucial, but remember, the potential rewards can be significant. To recap, investing in gold and silver can be a smart move in today's economic climate. These precious metals offer a hedge against inflation, economic uncertainty, and currency devaluation. Their unique market dynamics and potential for returns make them compelling additions to any investment portfolio. We encourage you to explore these opportunities further, keeping in mind the associated risks and challenges. To learn more, check out some of the resources we've listed in the description. Remember, the key to successful investing is informed decision-making.